All right. Hey, everyone. I'm Mattie.
And I'm April.
And we are the Pancoast Group, your local Chester County Realtors. Go ahead,
Today,
April.
we are chatting with Gerry Manzi of the Manzi Mortgage Group. Thanks so much for coming on today, Gerry.
Hey guys, thanks for having me. It's great to see you both.
Good to see you. Can you just tell everyone real quick a little bit about yourself?
Well, my name's Gerry Manzi. I've been in the mortgage business for a long time, 25 years. Yes, I am the Doogie Howser of the mortgage business. I started when I was 9 years old. Ha ha ha. And no, but as a kid, I got in the mortgage business and just made a lot of friends and a little money off a lot of people over the years and just kept doing it and doing it and doing it. And here you go. And you wake up and now you're me and doing it for a long time. So we're really fortunate.
That's awesome. And you've been doing it for so long. You have so many connections, which is amazing. So
Thanks.
April has your first question.
So we work with a lot of first-time home buyers. So when a first-time home buyer reaches out to you, what can they expect of the process?
I'm glad you asked. I love everyone, but we really love first-time buyers. What can they expect? They can expect to have a lot of fun, first and foremost. So many people are intimidated to come to us. You know, we're referred to as like, it's like going to the dentist. No one wants to go to the dentist, right? No offense to our dentist friends, but the idea of getting pre-approved and having someone run their credit, that's daunting, right? So we try and make it fun. And hey, it's a mortgage. We're not going to Disney World, but like we try and make it as fun as possible and we make them laugh. And I don't want to say dummy it down, but when you're me, it's not hard to dummy something down. You know, and I'm a regular guy. So we talk to others the way I'd want someone to talk to me based on, my years of experience doing this. And it comes over pretty easy. And invariably, like 30 seconds into any phone call, whether it's a Zoom or whether it's over the phone or in person, every first time buyer lets out a sigh of relief, like, oh, I was supposed to call you 6 weeks ago. If I knew it was going to be like this, I would have done it then. Like it's not hard, and we make it fun. So yeah, that's what they can expect. We talk about their income, their assets, where do they work, how long they work there, have they robbed Wawa recently, things like that, and we go on a spending spree and show them what it means. That's it.
It is so true that you make everything fun because all of the clients that we send to you, they immediately text or email us and they're like, oh my God, we just got off the Zoom with Gerry and like, he's such a cool guy and it was so easy and he tells the funniest jokes. And so, yeah, it's definitely—
They're not all good jokes, by the way. Let's get that out there.
That's great dad jokes. Great dad jokes. But yeah, and like you said, I mean, if you're in it for a while, sometimes you forget that it's new for some people, but that's not what you do. You remember to keep it simple because all of these terms are new for these first-time home buyers. So
you think we try to. Unfortunately or fortunately, I mean, look at us. We're on Zoom here. It's the technology of today's day and age is amazing, right? We're so fortunate that we have it. Life is fast. It's all right there. But not a lot of people really want to talk to each other anymore, right? People want to text and Google and self-educate, and they absolutely can. It's all like they're at their fingertips. Or they can talk to the people who've been doing it for a long time and get that education. So those who are interested in learning are those that seem to have that much more of an enjoyable process. The ones that are a little bit more shy about opening up or talking about concerns or anxieties and things like that, they're the ones that keep it closer to the vest. It's a little bit trickier. But when we ultimately, break through, then they realize, all right, we're here to help them. We're not here to sell them a product. We're here to educate them and just provide a service. A mortgage is a means to an end. It's a means to get them into a great house. And that's all it is. So we do.
Yeah, and people can absolutely like self-educate, but they don't want to stop there. They want to do that first and then go to the specialist, which in this case is you for mortgages, and bring their questions and make sure that they didn't go down the wrong path and didn't read something that doesn't make sense.
Yeah,
unfortunately, like not everything that you read online is accurate. I mean, there is a little bit of fake news out there. So Not all of it.
Quotes by Abraham Lincoln about the
Right.
internet. I think that was on the internet, people.
Yeah,
But it's every day that someone says to me, I know I can't do this, or I know I need to do this. And I'm like, I didn't tell you that. Like, you can do whatever you want to, or you don't have to do that. So like, innocent till proven guilty. Let us tell you what you, or another professional, but let the professional tell you what you can and can't do, or what you need to do to make this happen.
yeah, definitely. We hear all the time still people thinking that they need 20% down to get a mortgage, and
Wait,
that
they don't? I didn't.
exactly. So there's so much misinformation out there that like the years
Yeah.
of experience that you have truly are invaluable compared to what you'll find on the internet.
Awesome, thank you. But that's really what they expect. Just come with an open mind and get ready to have some fun.
Yeah. So our next question is, can you talk a little bit about the difference between an ARM and a conventional loan? Because a lot of people, when they get on the internet, those two things pop up, and when they self-educate, they might not get the right information.
There are absolutely, Mattie. There are so many acronyms in my industry. In fact, I really can't stand them, to tell you the truth, because I know when I'm buying something, or someone comes to fix our freezer and they talk about acronyms, like I don't know what the HDI is or whatever. Like, dummy it down for me. So an ARM is an adjustable rate mortgage. um, ARMs or adjustables have been really non-existent for the last probably 6 or 8 years, because there was, long and short of it, fixed rate mortgages were just more attractive or equal to an adjustable rate. So an adjustable rate mortgage is fixed for a period of time, looked at like a fraction, like a 5-1 ARM, meaning the rate is fixed for 5 years. And then after the 5 years, it could adjust each year once a year. That's where the one comes in, 5/1. So when you could have a rate that's fixed for 30 years, that's the same rate that's fixed for 5 years, like I would be a criminal if I suggested a 5-year ARM to you, right? I wouldn't take that myself. So for the last handful of years, it hasn't even been in the discussion. Recently, and as rates have spiked in the last year or so, adjustables have come back a little bit. So it's kind of a risk versus reward. So going back to the question specifically, a conventional 30-year fixed rate, conventional 20-year, conventional 15-year, it's fixed. The rate is fixed and the payments amortize over that period of time. So 30-year fixed rate, at the end of 30 years, you have no mortgage. 20-year fixed rate, your rate's fixed for 20 years. At the end of 20 years, you're paid off. There's no mortgage. An ARM, the rate is fixed for a period of time, but after that period of time, the rate can adjust. It can go lower, it can go higher. So we evaluate with the client, what's the plan for this home? Are you staying forever? Is this a starter home? Do you have no idea? Which most people are that way. And then there's those that say it's a starter home and they live there forever. There are those that say they're going to be there forever and a year later they're out. So we kind of evaluate their goals and see, what's going to make sense. There isn't still today much of a difference between a fixed rate and an adjustable. So unless it's a relatively significant loan size, it's not going to make much of a difference in their payment. And the risk of, saving $30 a month to maybe have a rate that will adjust in several years, it might not be worth it. So we'll show them the options and kind of let them see what makes sense. But we really don't do that many ARMs still to this day. But the discussion is starting to happen more and more. Does that make sense?
Yes. So then when would someone choose to go with an ARM versus a conventional?
So probably not just yet, but in the foreseeable future, depending on where long-term rates, like 30-year rates, go, if there's so let's pretend it's me, all right, and I'm buying this home, and I could have a 30-year rate for 6.5%, and I could have a rate that's fixed for 5 years at 5.5%, a 1% incentive. I'm like, all right, that 1% based upon a certain loan size is going to be a savings of $300 or $400 a month, depending. relatively speaking, that could be significant. Now, if it's $150,000 mortgage, that 1% difference is going to equal $60 or whatever it is. Probably not worth it. But you talk $300 or $400, I'm like, okay, that could be life-changing for some people. It might make sense, especially coupled with, all right, we're buying this home, but our youngest, use me as an example. My youngest daughter, Juliana, is a freshman in high school. We will absolutely be moving in when she's graduating high school. Okay. We do have an ARM on our house. We have an ARM at a very low interest rate. We did it a year and a half ago, but we did it because it was a 7-year ARM and it made sense. It was a significant savings. And I knew, like, without question, 7 years was more than enough time. If I took a 5-year ARM, knowing that I might be in the house for 5 to 6 years, that's a little risky. So it goes back to their goals, and $300 a month savings to some people might not mean anything. $300 to others is life-changing. So, do you want Chinese food tonight? Do you want sushi? Do you want fried chicken? Like, we show you all the options, like a menu, and you see, like, wow, that payment's way lower. Let's talk more about that. And then we give the pros and the cons so they understand, more importantly, the potential negatives. If they're comfortable with that, then that's when it would make sense.
Yeah. Awesome.
Awesome. Well, moving on, we hear the term closing costs thrown around all the time. Before we got into real estate, everybody hears closing costs, but not a lot of people actually know what closing costs are. Can you tell us a little bit about what closing costs are and what some things may be that are considered closing costs?
I was hoping you were going to tell me what they were. So yes, unfortunately, there are closing costs. And pretty much every client I've ever seen gets a little bit of sticker shock because they do add up very quickly. Even with friend and family discounts and we roll out the red carpet, it's expensive. So there are closing costs that are set by the state, and there are others that are just transactional ones. And they're called closing costs because they're considered like you pay them once, non-reoccurring costs. So in Pennsylvania, everyone's going to pay at least 1% of the sales price to the state. Buyer pays 1%, seller pays 1%. Certain areas are a little bit more, but like the vast majority is 1%. There's title insurance that is a state regulated fee based upon your sales price and your loan amount. There are mortgage expenses. There's an appraisal. There's credit reports. There's processing fees. There's things of that nature. And then there's recording fees to file the mortgage and stuff like that. So those numbers are set in stone based upon your loan size and your purchase price. But then there's also other items that are due that are considered like prepaid items, and they are like upfront taxes, upfront homeowners insurance, and then like prepaid interest. So what we do when we speak with a client and go over their goals and their concerns and wish list and all that fun stuff, I tell them that we go on a spending spree. They say, hey, I want to buy a $300,000 home. I have a certain dollar amount to work with, and I'd like my payment to be like this. We show it to them, meaning we show them these are your closing costs. This is your monthly payment. This is your interest rate. And then we explain what they're looking at in video. And we focus on, this is the cash due from the borrower. These are your closing costs. This is where they are all made up of, line item breakdown, and this is your down payment. This is the total to buy this home to be at those parameters. Do you like it? What do you think? Most people say, I don't understand it. Explain it 10 times. And that's what we do. Okay. But yeah, they do add up very quickly.
Yep. Okay. So I guess we're wrapping up with our last question, right? And this is going to be everyone's favorite question because it's a little peek into what you do daily. But what is the craziest story you have from your job?
So I could go a couple different ways. Crazy, like, so the craziest, It's a sad one though. It's not so I don't want to bring anyone down, but I first got in the mortgage business, and like literally one of my first 3 or 4 transactions, and we were representing a young buyer whose parents were co-signing, and the father got in a car accident and he became quadriplegic throughout the process. And I had to go to McGee Rehab, and he literally couldn't move his arms and legs. And his wife had to put a pen in his mouth and have him, I had to hold up a piece of paper and he had to make an X to acknowledge it. And like, I was crying and they were crying, and it was really a sad. Sorry for my dogs. We do give a dog out, by the way, to every client who purchases with us, by the way. That's a bad joke. Edit that out, please. So that's definitely the craziest, but not a happy crazy. And there's a dog walking into my room.
I was gonna say, is that a ghost?
You're gonna have
Tucker,
to
are you
show
gonna
us.
show yourself? Everybody, come here. Come here, Tucker.
Let's see your dog.
Come here. Come here. Come here.
Part of the segment, show us
Yeah.
your dog.
There's Tucky.
Oh my gosh.
Tucky. Say hi to Girl Mattie. Here we go.
Oh, she's all excited.
All right, Tuck, now they're gonna hang up on us. Yeah.
Well, thank you
Sorry
for
about that.
some of your insight with us for your industry. And if we had any buyers that wanted to reach out to you, what is the best way for them to get in touch with you?
Reaching out by the phone is typically the easiest, phone or email. So, 610-329-3636 and G Manzi at Manzi Mortgage Group. Call, text, email, all the above, whatever's easiest. We're just glad to help however we can on our end. You guys were awesome. Thank you for this.
Yeah,
Awesome. Thanks so
thanks.
much, Gerry.
All
See
right, thanks, guys.
Make sure you tune in for the next one.